We're getting a fresh read on the housing market today. New home sales climbing in September, up 4.1% from August and up 6.3% from September of last year. Joining me now, Alliant Credit Union's head of residential lending, Dan Bauer. Now, Dan, this uptick comes after existing home sales fell to a 14-year low. So what does this all tell us about the state of the housing market and what home buyers are ultimately looking for?
So what this tells us is that housing demand is starting to increase, and we are starting to see a little bit of a lower interest rate environment as a result of recent Fed rate cuts in September, Alexandria. This lower rate environment can lead to lower monthly payments, and by extension, give homeowners more buying power, allowing them to consider options like potentially more expensive homes and more desirable neighborhoods with better features for their families.
And like you mentioned, mortgage rates, the Fed is expected to continue to cut interest rates through the end of the year. But how much of that has already been priced into where mortgage rates are currently hovering, and how much more relief do you think we could see?
So we have seen a lot of the Fed rate cuts priced into the market over the past several months, and we've seen that reflected in mortgage interest rates as they dropped in the month of September. Right now, the market's looking at potentially 2 additional Fed rate cuts between now and the end of the year. And while other economic factors like job claims and housing supply are going to influence the interest rate environment as a whole, we do expect that we'll see mortgage rates continue to see a little bit of relief between now and the end of the year.
So regardless of where rates head in the future, what are some key financial tips you'd give home buyers, particularly first-time home buyers, that hold true no matter how much we see rates fluctuate?
Sure. So as a first-time home buyer, first and foremost, you want to have a plan. And getting pre-qualified to understand your income, your debts, what you're able to afford is critical. At Alliant, we offer a free, no-cost, no-obligation pre-qualification program to assist home buyers in that very endeavor. Secondly, you want to consider adjustable rate mortgages in this environment. Adjustable rate mortgages provide an alternative in high interest rate markets with a lower initial interest rate and possibly the ability to refinance if rates drop in the future. And finally, always evaluate the overall affordability with your long-term financial goals. Creating a customized plan for you and your family is absolutely critical. Working with professionals like financial advisors, like a professional mortgage lender and real estate experts in your market are always fantastic advice for any first-time home buyer.
And Dan, the inevitable question I have to ask, should you hold out for lower rates if you're searching for a new home, or should you buy now?
You know, it's a great question, Alexandra. To be honest, holding out for lower interest rates can be offset by increased housing demand. So if you're in a market right now that's competitive, you have a financial plan that works for you and your family, you've been pre-qualified and you're confident you can move forward, moving forward with that transaction is probably in your best interest at this point. If you wait and hold out for longer interest rates, as mentioned, you might see an offset in increase in housing demand, which could increase housing prices, offsetting some of that benefit of the lower interest rate environment.
And Dan, we often get a lot of data points when it comes to housing. Are there any signs that folks can look out for that signal, you know what, hey, now is a good time to get into this market, maybe besides just mortgage rates?
Sure. So always, as always, when you look at broader economic factors like job claims, like the macroeconomic environment in terms of looking at housing supply, a lot of that's relative geographically across the United States, but home buyers should be mindful of the broader environment. Typically, when we see negative job claim numbers or we see negative economic indicators, that would typically mean lower interest rates. But again, so much of this is market sensitive. So much of this is specific to the market that the buyer is looking in. That as long as they're working with a professional mortgage lender, a professional real estate agent, have a financial advisor in their corner, and they're listening to all those opinions and opportunities to be able to influence their family, they'll be able to make the right decisions for them.
And I'm curious, what type of buyer are we seeing within this weird, wonky market? Is it people that are single? Is it families? Is it folks moving from cities to suburbs? What are some trends that you're noticing?
So we're noticing a lot of trends of people moving from cities to suburbs. That's been a trend that's been in place here for several years. We're also seeing a lot of move-up buyers. Right now, some of the, unfortunately, first-time home buyer markets have been prohibited with the increase in elevated home prices. So home prices have remained high. That's been a prohibitive factor from families being able to enter into the first-time home buyer market, unfortunately. So what we're seeing a lot of right now is families that are migrating from cities to suburbs, choosing ideal geographic locations for them and their family for whatever reasons that may be. And we're also seeing the market reflective of a lot of home buyers that have chosen to move up if those properties become available and the opportunities present themselves in their particular market.
All right, we'll see where this market heads through the end of the year. Dan Bauer, Alliant Credit Union, Head of Residential Lending. Appreciate your time.
Thank you, Alexandra. Great to be with you.